Hey everybody. Today I want to talk to you about a very simple question. When is the next real estate crash coming? When is it coming? And I want to talk to you about two scenarios. One of them would happen sooner. The other one would happen later, maybe in a few years. They're different from one another, and I think that they're two scenarios that are in the cards. I don't know if either of these two is going to happen, but they could happen, okay? So scenario number one, the United States economy goes into recession starting, say, tomorrow. So tomorrow morning, GDP begins to contract and the stock market starts to sell off and come down. This is entirely possible. It's entirely possible because we've had an economic expansion going on about 10 years now, and we've had a stock market that's been in a bull phase for about 10 years now, and that's a long time. Typically, they turn down before they run that long. So if this happens, what will develop is that a certain number of potential sellers will bring their house onto the market. They'll quickly list their house, trying to sell while prices are still high. Meanwhile, some of the buyers are going to pull back and go to the sidelines because they're either going to be afraid or they're going to be trying to time the market and say, okay, well, let's not buy now. Let's buy in 1 year, year and a half, 2 years, whatever, when prices are cheaper and we'll get a better deal. And if that happens, there will be a downturn in the real estate market and prices will fall somewhat. There will be a general kind of fear and malaise that's out there with less buyers. Sellers will have to chase buyers down and this type of thing with regard to price. But what there will not be is a large and sustained bear market in real estate. And I want to tell you exactly why right now. I'm going to give you a very simple set of numbers. In 2007, which was the peak of the last real estate cycle and the beginning of the downturn, there were 301 million people in the United States. 301 million. How many are there today? There's 331 million. So there's 30 million additional people in the United States today that were not here 12 years ago. Most of that is population growth, a little bit of immigration, but you're talking about 30 million people, which is approximately like 8.5, maybe 10 million new households. Well, 10 million new households means you need 10 million new housing units. But in the last 12 years, we haven't built 10 million new housing units. We've probably built somewhere in the neighborhood of half of that. And so the ratio of households to houses or households to housing has changed. It used to be more housing, less households. That was part of the reason that we had an economic or a real estate crash, is they had overbuilt. But now there's more households than there is housing. And that fundamentally changes the supply and demand characteristics. And it means that there cannot be a large, deep, steep, terrifying, sustained real estate crash like there was 12 years ago. The last one was really bad because we had overbuilt. They also had all the problems with all the loans. But the reality is there was more housing than there were households. This time, even if the economy turns down, right now, there's more households than there are houses. It's not going to happen. It's not going to be a big one, but it could happen tomorrow. So if the economy goes into downturn, you should expect a real estate crash. You should just expect a small and relatively brief real estate crash. Maybe it would be 9 months, 12 months, 18 months wide without real sustained big drops in prices. Something like that could present an opportunity to buy. No need to panic sell in a situation like that. No need whatsoever because it's just not worth doing. Let's talk about scenario number two. Scenario number two is this. We have multiple years of really steep inflation and the population really begins to scream and the government has to do something. They've absolutely got to do something about it. And so what they do is they choose to significantly raise interest rates in order to rein in inflation. That's the price of fuel, the price of food, the price of heating, clothing, everything, including housing. Okay. And this has actually happened in the United States before. This happened in the 1970s and the early 1980s. The 1970s had an economy that they called a stagflation economy, meaning the economy was not growing very fast, but while it wasn't growing very fast, consumer prices were rising really fast, and that included the cost of housing, both rents and purchasing. And basically people were getting squeezed and getting squeezed. Ronald Reagan became president in 1970. He chose a guy named Paul Volcker. And he specifically chose Paul Volcker because Paul Volcker believed that we could rein in rising prices, that we could tamp down inflation by spiking and significantly raising interest rates. And so they took interest rates and they bumped them up, told the Federal Reserve, do it, boom, they bumped them up. And interest rates for mortgages were around like 9 and 10%, except sometimes they were as much as like 15 and 17 and 18% temporarily. but they were sustained at like 9 and 10 and temporarily at like 15 and 18. And they did manage to quash the inflation, but what happened in the housing market? There was a big, huge real estate crash. Prices dropped a lot in 1980 and 1981 precisely because the interest rates had been raised so much. And functionally what's happening there is that the price to buy a house is dropping steeply because the price to borrow the money is going up a whole lot. So when the price to borrow the money goes way up, obviously all the buyers can afford less because your mortgage is so much higher to borrow the same amount of money as it would be if you had an interest rate, at 1/3 of the rate or something like that. So one of the things you might be thinking is, wait a minute, okay, so that happened in the 1970s and then in the early 1980s. Isn't that kind of what has been happening over the last decade? And if that's what you were just thinking, you're absolutely correct. Consumer prices have risen quite steeply over the last 10 years. Everything from rubber hoses to cheese, fuel, rent and housing, health insurance costs, the price to send your kid to college, clothing, all of it has gone up quite a bit. And so that's what makes me think that we may be facing another situation like the one that happened in the 70s and the early 1980s. There's a difference though. And the difference is that we used to have mortgage interest rates and interest rates in general that were sustained at much higher levels than they are now. We have been in a long-term low interest rate environment since September 11th, 2001. When the terrorists hit those two towers and they fell down, we dropped interest rates by like 2 or 2.5 full percentage points because we did not want our economy to get thrown into a tailspin and get thrown into a recession, because the World Trade Center that's a nerve center for world trade. That's what it was. And since they were able to hit it and crush it and bring it down and kill all those people and destroy those companies, there was a chance of a systemic problem that would have thrown the United States into a recession. So we dropped the interest rates way down, and then they just stayed way down. It's been 18 years now, and they never came back up. They've just kind of gone like this, at this lower level, just kind of wiggling along with these sustained low interest rates. This is a major reason why prices have gone up so much. It's a major reason why housing went up so much, both in the last cycle that eventuated in the crash and in this next cycle. And so the government's willingness and desire to really spike interest rates in order to contain rising prices, in order to contain inflation, knowing that it will cause a recession, they don't have the stomach for that they had in 1980 and 1981. The reality is the government doesn't think that way as much as they used to, and I don't know that we're ever going to return to a place where it will. However, because it has happened historically, and because we are in a set of conditions that are similar to the 1970s and early 1980s, it is a scenario that's possible. And what this would be over the next few years, basically people getting priced out of life, people working full time and not being able to afford to live, period. Whatever expenses we're talking about, from housing to healthcare to fuel and food and all of it. And then an outcry going up that was so loud that the government felt like, we've got to do something about this. And whoever's in office, whatever party's in power, saying to themselves, we've got to respond to this outcry or else we're all going to get thrown to the street in the next election, and then choosing to spike interest rates. But keep in mind that we are now 18 years into an unprecedented, there is no historical precedent for this, low interest rate, sustained low interest rate environment. But if you see things getting extremely bad next year, the year after that, the year after that, we could have a big real estate downturn, something like 3, 4, 5 years out. I'm not sure. So in short, there are two scenarios that I can see where a real estate crash could happen. One would happen more immediately, but it would be a much softer, much briefer, much less serious event. And if this happens, do not panic sell your house. Don't do it. It's not going to be worth it. Okay, the second would be really high inflation, the population going crazy and starting to scream and cry out, and it would become a big issue, and the government responding by spiking up the interest rates in order to contain inflation and pull prices back down. But I'm somewhat suspicious about that because we are no longer in an environment where the government really ever wants to do that, whether we're talking Democrats or Republicans. However, it has happened historically, and it has resulted in a big, steep, nasty real estate decline. So we can't say that couldn't happen. We can't say it won't happen. In any case, those are the two scenarios that I feel that you should be looking out for. I think those are the two things where if you're going to keep your nose to the grindstone and be looking at what's going on, whether you're looking to sell or you're looking to buy, those are the two scenarios that I think are really plausible in the next short to intermediate period of time here in the United States. Thank you guys. Love you. Check you soon.